Hey everyone, it's Michael Beresford back again for today's Open Corp Property Wealth WOD. What are we talking about today? Well, today's a really good reminder around why property investing is an effective long-term wealth creation strategy. There are lots of things out there that are get rich quick and chase this and amazing rent returns and X, Y, Z. But if we bring ourselves back to the core fundamentals of what we're trying to do here as wealth creators, is to apply a proven strategy that works over time with minimal risk and minimal impact to our cash flow out of our pocket. What does it require us to do then? It requires us to buy well-chosen property that we have a high level of confidence will double in a 10-year period. Okay? And the reason for that is because, in essence, successful property investors let time work for them and they leverage what's called compound growth. Now, if I could leave one bit of insight with you around my experience with wealth creation, compound growth would be it. Einstein called it the eighth wonder of the world, and this is why. Compound growth is basically growth on top of growth on top of growth. Okay, so if you think about why most property investors don't achieve amazing financial results, it's because most Australians want stuff today. And unfortunately, that's not how it works with property. But I'll show you what compound growth is. Let's say that you started out with one of something, one apple on your apple tree. That's my favorite example. And let's say that this is the period of 1 week, and over that week, your apple tree doubles its production. Okay, so 1 has gone to 2. You double your production, you go to 4, 8, 16, 32, and so on and so forth. So basically what we're saying here is that you make far more apples, or your apple tree makes far more apples in the same unit of time down the track than what you do at the start. Okay, classic case. I know of a property that was bought around 1980 in Glen Waverley, just near our office in Melbourne here, for about $90,000. That same property today worth about $1.2 million. So if you think about it, in the 10 years between 1980 and 1990, it basically grew by 90,000 or doubled in value. Then it went to 180, to 360, to 720, and so on and so forth. Okay, so the reason why, if you look at all the rich people on the BRW rich list, they've all got grey hair. Why? Because they're making plenty of apples up this end of the process because they started young and let time work for them. Okay, so another classic example, if I said to you that I'd give you 1 cent, let's remember back to the days of single cents, okay? If I gave you 1 cent and that 1 cent doubled every day for a month, what would that be worth? It's actually just under $21.5 million, okay? But remember, work it out, after the first week, you're still less than $1. Because 1 cent goes to 2, goes to 4, goes to 8, goes to 32, goes to 64. So you're less than $1 after the first week, but after a 31-day month, you're at $21.5 million. So there we go, guys, okay? Please remember, get rich quick equals lose money fast. Apply a proven process, mitigate risk, and allow yourself to not only let time work for you, but imagine how powerful this would be if you had 2, 3, 4, 5 or more properties in your portfolio doing exactly the same thing between years 10 to 15 or years 15 to 20 on your wealth creation journey. Hope that's been useful. We'll catch you next time.